we feel that the return on investment from AI will actually come from inference. It's not going to come from pre-training or training. It's going to come from the tokens which are generated, the billions and billions of tokens which will be generated in the future as more and more people realize the full utility and the scale of what LLMs can do for their day-to-day life or their work and so forth. So we think that this build-out is still early days.
US CPI rose by 3% year-on-year in September 2025. If you dig deeper into the individual everyday food items like coffee, meat, and even lettuce, the inflation rates actually range between 4 to 19% year-on-year depending on the item. So these are really high jumps in prices for the consumers just in the past 1 year, and consumers are really feeling the pinch.
We might get to a world where, real-world use cases and the difference between the closed model and the free models might just basically vanish.
Markets, business, technology, investing, insights. AlphaTarget PULSE. AlphaTarget PULSE is a production of AlphaTarget Limited, a company registered in Jersey Channel Islands. The opinions expressed in this podcast and the information provided are for informational and educational purposes only, and are not to be construed as investment advice. You should consult with your own registered investment advisor or other qualified financial professional before making any investment decisions.
Welcome back to AlphaTarget PULSE, your podcast for insights on markets, business, technology, and investing. In today's pod, we will cover some of the recent news, go over the recent Fed FOMC decision, and also go over some of the other issues that we are monitoring. So in terms of monetary policy, we've heard yesterday that the Fed's actually cut the Fed funds rate by 25 basis points and basically signaled that they are not in restrictive territory anymore, that they're in actually a neutral sort of phase, and they are not looking at immediate rate cuts, perhaps one more cut next year, and they're just going to look at the incoming data and decide the next course of action. And Powell also said in his press conference that the labor market in the US is likely basically flat, that the jobs growth we have seen over the last few data points might actually not be there because of some downward revisions. So the jobs market is pretty much, flat. The Fed is no longer restrictive. The Fed has cut rates by 3 times this year so far. They've ended QT on the 1st of December. And yesterday, they've also signaled that they're going to buy $40 billion worth of T-bills every single month, which in our view is like a QE light. It's not full-fledged QE, because with QE, the Fed typically buys longer-term treasuries to try and keep rates low. But for now, we have a pivot from the end of QT to QE light, and then possibly QE down the road if the economy warrants it. So historically, this has actually been good for risk assets. Whenever the Fed basically eases policy, makes monetary conditions more favorable, risk assets, equities, and so forth benefit. The economy does well because the borrowing costs come down both for consumers and businesses, and that spurs credit growth, debt growth in the economy. People and businesses borrow more money because credit is now cheaper, loans are cheaper, and that basically stimulates through the economy. The only caveat here is that if we do get a big recession, and if you have, a big spike in the unemployment rate, that means that the Fed is behind the curve. And in that scenario, the stock market does tend to go down 15, 20, 30%. But as of now, we don't have any clear signs that the US economy is headed to a full-blown recession. We feel that this is likely a mid-cycle slowdown because of the restrictive policy the Fed pursued for a number of years. And now they are basically, relaxing, and hopefully we are going to get a big rally and a big relief in the economy and a big rally in the stock market. So we think still that, we had a big pullback or a sell-off in the growth stocks in the AI-related trade in the last few weeks. The market seems to be bottoming out. And a number of these growth stocks, these AI-related stocks, they're extremely, extremely oversold on the weekly charts. If you look at the momentum indicators, they are in deeply oversold territory. They have basically flashed some bullish reversal signals. So if everything goes according to script, we feel that these stocks are going to rebound pretty sharply over the next several months. We are now in the seasonally good time of the year, which is December. We traditionally get the Santa Claus rally, and especially more so when the Fed has started easing after a 6-month pause or longer. So, with the stock market where it is, history shows that when you have such a scenario, the S&P on average has rallied about 16% over the following 12 months. So this is where we are. Nobody can predict the short-term zigs and zags of the stock market. Many claim that they can do, but it is next to impossible. If you can get the intermediate term trend right consistently, that's what's good enough. And we feel that over the next few months, we are likely to see a decent rebound, especially in these AI-related stocks, which were unfairly punished. And on the AI trade, there's been a lot of noise recently, from the likes of Michael Burry, some other people who have basically said that this is a full-blown bubble, that these companies are spending money that they don't have. Whereas if you look at the data that we provided in the previous podcast, we showed you that the Mag 7 is actually spending money on this data center capex boom from the free cash flow that they generate from their core legacy businesses. So they're not actually taking on any significant amount of debt. They may do that in the future, but like any build out of any major technology, we feel that the return on investment from AI will actually come from inference. It's not going to come from pre-training or training. It's going to come from the tokens which are generated, the billions and billions of tokens which will be generated in the future as more and more people realize the full utility and the scale of what LLMs can do for their day-to-day life or their work and so forth. So we think that this build out is still early days. We are going to get air pockets. We're not going to get a straight line. It never works out that way. And there may be a period where, the stock market may diverge from what is really happening on the ground as far as AI is concerned. So as a technology, we feel that AI is still very, very early innings. However, the stock market is going to basically, march to the beat of a different drummer, which is the Fed policy and sentiment and flows and so forth. So, our job is to try and stay invested in the best businesses that we can find in these areas, and then use, trend following methodology to basically ride the trends in these stocks and also hedge the portfolio when needed. So with this out of the way, let's introduce our panelists, our team. First and foremost, Oyvind, he's basically not here today. Oyvind is a big picture thematic guy. He's previously worked at Peel Hunt, Berenberg, and a family office. Next, I would like to introduce Irnest, our numbers man, CFA charter holder, top-ranked analyst in South Africa, and a former analyst at SocGen. He's here back after his break. Anirban, Mr. Bleeding Edge, PhD in computer science, and former director of research and portfolio manager at The Motley Fool Australia. He's here with us today. Damia, our data queen, former analyst who previously worked at Citibank and various investment banks and brokers. She's here as well with us today. So guys, before we go any further, how are you guys all doing?
Good.
Doing great, Puru.
All great. So let's just kick off first and take a slightly different route. Let's just discuss a bit of macro, which has been floating around on the internet. Recently, there was a Substack article or a post by a Wall Street portfolio manager which went viral after he mentioned that a new poverty line for the family of four in America is $140,000 of income, which seems, a lot. What do you guys make of this? Damia, I'll come to you first.
Thanks, Puru. So I do believe that $140,000 a year, that's a big number. To compare that with actual data from the government, the federal poverty level guided by the Department of Health and Human Services for a family of four is about more than $32,000 a year, while the US median household income in 2024 was about $83,000 to $84,000. So I get that the writer's point of view that the models that economists use may be outdated and there's a gap between data and reality. For example, a family earning $40,000 is in a better position than a family earning $100,000 a year. The former benefits from healthcare, food stamps, and heavy child subsidies, while the latter will have to pay market rate for their healthcare, food, and childcare, which can be exorbitant in urban areas in the US. But I think there's a difference between living in poverty with constant deprivation versus having adequate quality standard of living. And many would agree that the $140,000 benchmark is based on maintaining a reasonably decent standard of living. But this can change depending on the cost of living in different parts of the US.
Well, inflation has been a bit of a nightmare over the last few years after, the Fed pumped so much money into the economy with QE during COVID and dropped rates to zero. Um, can you just share some data points about this? Your inflation was sky high and then it's been trending down. Can you give us some numbers, Damia, please?
So the US CPI rose by 3% year on year in September 2025. But if you dig deeper into the individual everyday food items like coffee, meats, and even lettuce, the inflation rates actually range between 4 to 19% year on year, depending on the item. So these are really high jumps in prices for the consumers just in the past 1 year, and consumers are really feeling the pinch. Puru.
I mean, that's true, because if you look at the way the government in the US calculates these inflation numbers, it's not very realistic. People on the ground, unfortunately, feel the pain a lot more, despite the fact that the government massages these numbers to try and, make them appear better than they are. And monetary policy basically dictates price increases or decreases. When the Fed lowers rates, stimulates the economy, makes borrowing easier and cheaper, and when it pumps money into the economy with QE, then inflation tends to go up, especially if the Fed or the government also is basically, printing money. Whereas if you look at the Fed, when the Fed raises interest rates and tightens the monetary brakes, then prices come down. So we have seen a big deceleration in the inflation rate. And now we are basically closer to 3%, but the Fed's target is 2%. Well, 2 or 3, you can call it what you like, but I think anybody would agree that, 2% inflation might be a bit too unrealistic in this new environment. But again, time will tell. So how has this been affecting the consumer sector in the stock market, Damia? I know you watch the consumer staples and the consumer discretionary sector quite closely.
So year to date, the S&P 500 Consumer Staples Index has actually only increased by a mere 1 to 2%, while the Consumer Discretionary Index has performed marginally better at around 4% year to date. But in comparison to how the indices have performed in the past 5 years, staples grew by a total of 24%, while discretionary rose by 51%. So it seems like these indices are peaking with the added pressures from tariffs and rising inflation, as well as increasing unemployment rate.
Right. And looking ahead to 2026, what are the biggest risks for the consumer sector? Damia, I'll come to you first, then maybe we can bring in Irnest and Anirban also.
There are still uncertainties surrounding tariff and trade negotiations. Some companies have already started increasing prices of their products, while some are actually delaying the pass-through to consumers because the tariff situation is kind of all over the place right now. So we have yet to see the full impact of tariffs on consumer price increase. At the same time, the US dollar is weakening, so this may further push prices higher on imported products, reducing the affordability of consumers. So I do believe that the mass market consumers are already stretched very thinly at the moment, so it's hard to see how consumers companies, especially those serving in the US, can deliver growth in such an uncertain environment.
No, good points. Anirban, what do you make of this?
I think I mostly actually agree with what Damia said. I mean, if you look at the restaurant stocks and, fast casuals and so on in the US, all of them have seen same store sales growth basically come to a screeching halt, right? And it's like for all those reasons, they've all been trying to pass the increase in prices or tariffs back to the consumers. We've seen that with other things like, with companies like, Deckers and like Nike. They're all struggling with the fact that there's tariffs and at the same time, the consumers are slowing down. So I think there's a real risk there. And as you've just talked about, like, maybe the Fed is really trying to get too close, a fine line here. And, maybe the cut is too late. We don't know. Only time will tell, right? But the consumer definitely is struggling in my view.
Yeah. Ernest, I'll come to you next. Competition is heating up in the generative AI landscape. There's been a lot of announcements. There have been a lot of news releases. X has become a battleground between these large cap tech companies. All the CEOs are basically poo-pooing each other's ideas and trying to, get one up against the other. Can you give us an overview of the major players and the major, their market share moves over the past year? Who's eating whose lunch?
Thanks, Puru. Well, look, I mean, a year ago, it was OpenAI's ChatGPT that launched, and they've really stolen the show. and they had about 90% of the Gen AI traffic. And what we've seen over the past year, the major change is that they've dropped their market share from about 90% to about 75%, and that 15% has been taken up by Google's Gemini. And the main reason is that Google has really gotten their act together in the last year and has pushed very hard. We've got 2 or 3 other major players, but they're much smaller. So xAI's Grok and Anthropic's Claude have single-digit traffic shares. So yeah, that's pretty much the main players and how we've changed over the past year.
Yeah, because I saw some data that OpenAI is actually losing a lot of share against some of the other players. Google's already, taken off. So this is basically a fight for OpenAI to lose. And it seems that the other competitors are now actually getting better and encroaching on its lead. It'll be interesting to, see how this actually plays out. I think one of the big winners in all of this has been Gemini, which has actually taken a lot of share from OpenAI over the last year or so. Anirban, I'll come over to you next. So distribution is a real moat, right? I mean, ChatGPT is currently the default chatbot on iOS, but CV 2.0 in 2026 could flip that to Gemini overnight. Meta's pushing Llama into WhatsApp and IG, Instagram. Does distribution decide the winner here? What are your thoughts?
Yeah, Puru, I think, we've already seen this play out to some extent. But yeah, like gatekeepers, if you think about the gatekeepers, people who control the ecosystems like iOS and Android, I think those guys have immense power. And the power really comes from access to basically the user base and the consumers that they serve. So there's at least 1 billion plus iPhones and maybe 3 billion plus Android devices. I mean, that's a huge base for, Apple and Google to target. Now, I think what often gets overlooked is, 2 things. Like, ChatGPT, of course, had 100% of the market share because they were the first into the business. But, ChatGPT also got maybe 150 odd million, maybe 200 million odd extra monthly active users. They came straight because of being the default in iOS 18. Now, Apple, we know, is working on this and is working on a new revamped Siri. Apple typically is never first with any of these things, but it tends to do, basically its goal is to do a good product and ship it. And what we have heard, at least the rumor mills say that, they're going to ship their own version, but it's going to be running a version of Gemini in the background. Again, this is all speculation. We don't know. But again, when this happens, OpenAI basically is going to lose maybe 15% of its consumer market share overnight, right? So, this is, I think, playing exactly as you guys discussed, that it is a game in which OpenAI is losing share. But, there are some other things that we need to keep in mind when we think about these, long gatekeepers. For example, if you think about Meta, which you mentioned with the Instagram and WhatsApp, it's pushing its open weight model Llama into, Facebook, Messenger, and so on and so forth, right? So, I think what is really important to keep sight here is, people talk a lot about the leaderboards and who is winning and things like that. But I think, once the AI disappears into the OS and disappears into the app, and it just basically becomes a part and parcel of what we do, the leaderboard is not going to matter. What's going to really matter is who's getting the job done and who has the reach, right? And we're already seeing that play out with Gemini as the default sort of, when, if you open search and it gives you basically the answers, it is the default for YouTube. It's the default for Gmail summaries. You just can't escape Gemini because then Gemini has the reach. And I think the same thing can happen, is already happening with, say, Meta, and is likely to happen with Apple. So yes, it's, I think, very interesting in that sense. Distribution really matters.
Well, that makes sense, Anirban. Ernest, distribution is perhaps one of the reasons Gemini is clawing back so hard and, regaining some of the lost momentum and opportunity when ChatGPT was launched. What else is driving Gemini's growth, in your opinion? Is it too early to start calling the winning horses in this race?
Thanks, Puru. Yeah, it's really early days with AI. Many people still haven't used it much. There's a whole lot of people out there that don't really know much about it. So we're still in the early days. What we're seeing now is most of the players are jostling for position. They building the bigger and better models, trying to get, more power into their systems. And if you look what's happening now, you're starting to see the beginnings where the different players have different strengths in different areas. So, for example, Claude is great with software development. ChatGPT is fantastic with its voice interactions. Grok shines with its real-time integration with all the current news flow on X, obviously, because it's part of XAI. And Gemini has this native sort of seamless interconnection with this entire Google ecosystem. And I think it talks to what Anirban said earlier, where, they're starting to show that it doesn't really matter that you're this separate, dedicated app. It's where you are in your ecosystem, and Google's very powerful. So I think Google's got huge distribution. It's no surprise that they're taking some of that market share, but it really still is too early to call the ultimate winners.
Anirban, while there's much news about these closed models, there's a tendency to ignore the open weight players like Llama 4, DeepSeek, Qwen that are flooding the ecosystem. Meta literally gave away a frontier level model, and now many startups are building on it. Is openweight the Trojan horse that finally breaks the closed model stranglehold?
Yeah, Puru, I think that's a great point you're making. I mean, we always talk about these leaderboards for these, the names that, we are talking about. But like the frontier models make a lot of noise. But the open weight models, from companies like Meta, so Meta has been in the forefront of this, but the Chinese companies like, DeepSeek and Alibaba, who makes the Qwen model, essentially they're providing very close to frontier level performance, but essentially for free, right? Now, we can always come back to nothing is free in this world, right? But the raw models here are monster, they're huge models, right? But often what happens is the open source community gets hold of these models, and we really shouldn't call them open source. They're basically open weight. And thousands of developers get onto it and they can quantize it, which is basically make a lightweight version, like a 4-bit model. And, maybe you lose 2 to 5% or so of accuracy, but now you're running, 5x faster, and you can fit this on 2 consumer GPUs, right? And it's just an example, like me, right? But suddenly something that cost you $15 billion to build runs on like in a 15K workstation. Mm-hmm. And I think this is powerful for a couple of reasons, right? I mean, there's a real flywheel effect here. So, Meta, which is the Llama model, which is integrated into all these things that you just mentioned, into, Instagram and so on and so forth. They release this, the devs use it. They build then products on it. Those products get used. There's real world data that comes in, and you can sort of improve and iterate over this, right? But from the point of view of businesses love this, because from a startup's point of view, there's no API cost. Right, you're not paying OpenAI or Claude or whatever or XAI for the API access. There's no rate limit, right? You can basically now control how you want to deploy it. So you could decide, well, I'm going to deploy this on, that cloud or this neo cloud, or do whatever I want to, or maybe build my own, private cloud and run it there. You don't worry about somebody preying on your work effectively, right? Because you have more control on it. So I think, we might get to a world where, real world use cases and the difference between the closed model and the free models might just basically vanish. And if we get to that world, the open weight models might actually be very effective. And the way I like to think about this is the open weight models are effectively like, you can think of these as payment rails, right? It's on the top of the payment rails that a lot of these functionalities get built. And, eventually this will get monetized in some form. Maybe it's like, fine tuning as a service. Maybe it's like hosting, like, what we see with these open source software products, maybe enterprise support, maybe some sort of data labeling, maybe it's, something else, maybe ads inside the model. So, but I think this monetization will happen. And I think this is a very powerful one. And we don't talk a lot about it largely because a lot of the movement on this, except for Meta, has been coming from the China side, right? And there's a tendency not to talk about this, but I think, this is something we shouldn't ignore. And this could spin up, inferencing rapidly. So it's something to keep an eye on.
Now that makes sense. So, given that where, we are in this cycle right now, what does the leaderboard look like in terms of the market share in 2027 for OpenAI, Gemini, Claude, Grok, and Wildcard? Damia?
I think Gemini will take the lead in the medium term. Google has the scale, data, and infrastructure to operate efficiently while delivering great financial results. Second, I think goes to OpenAI for its distribution. Third, Grok, and maybe fourth, Cloud, because it specializes in writing rather than everything AI tools like the other three.
So I'll come to Irnest now. Open source could be the disruptor that quietly wins the race, as Anirban just pointed out. But let's get real. Is this even a fair fight, Ernest? Google's got TPUs, GCP, $50 billion in net cash, and they're printing tens of billions in free cash flow each year. OpenAI is still on Microsoft's credit card. Can anyone really realistically compete with this war chest?
It's a great question, and it's so interesting what's going on here. First of all, OpenAI was the first mover. So we saw them gaining that massive, formidable 800 million monthly active users. They were the pioneer. They launched this whole thing first, the first consumer-facing Gen AI app. And so they've really got that head start. But, Google was held back for a while. And why? Because they don't want to cannibalize their massive search business. There was a time when OpenAI had just launched ChatGPT, where everybody thought, well, that's going to kill the whole search model, and you can understand Google holding back. But now that ChatGPT has become very successful, their own success has changed all of that. It showed everybody that this is the way things are going. So Google had better get a move on. If they don't, they may not exist in their current form in a long period. So Google got their act together. They worked very hard. And in the last year, they've caught up very well. They've got very competitive models, arguably better in some areas. And let's not forget that Google's a full stack player. So they've got everything. They've got the chips, the TPUs, they've got GCP, which is the cloud hosting. They've got a very strong customer-facing AI model in Gemini. And they've got huge distribution. Various apps of theirs have got billions of users. YouTube, search, they've got Chrome, they've got Android, etc. So we can't forget about Google. The other thing you pointed out in the question, Puru, is the money side of things, and we got to look at this and just bear this in mind. Google's got roughly $57 billion of net cash, and despite their capex having increased from 20 billion to 75 billion over the past 5 years, they are still producing 75 billion of free cash flow every year. So what that means is that they can spend a fortune going forward, and they can even afford to aggressively undercut the other Gen AI players. I mean, we haven't seen that yet because most of their pricing is very similar across these four, but they could easily do that and literally just bleed everyone dry. So it's very exciting. It's early stages, but we cannot count out Google at this point.
Yeah, I agree with you. I mean, they have been one of the best businesses in the world for the last 25 years. And, they've basically got their act together. As you've said, Gemini, is catching up very quickly, arguably now ahead of OpenAI's ChatGPT. And they've got a fantastic leadership management team and a war chest of cash. So we'll see how it plays out. And Anirban, I'll just come back to you with a follow-up question, which I asked Damia earlier. Given our discussion, what does the leaderboard look like to you in terms of the market share in 2027 for OpenAI, Gemini, Claude, Grok, etc.?
Yeah, I think I'm on right now, at least in the camp where I think the power flips back to the people with distribution. So I think, Gemini should do really well. I think, Apple might be late, but I think it should do really well. And, I still think that OpenAI will lose share, but it'll still be a prominent name because it's just got name recognition. So I think that's how I think it will shake out. But I think, behind the scenes, I think these open weight or models will also gain steam, especially on the enterprise side, I think. And that should really drive inferencing, in my view, is like, the API cost basically going to zero should really help drive inferencing. So that's at least what I think. Again, we'll see.
Irnest, your thoughts?
Yeah, I mean, I'll just stick with these three. I'll go Gemini, given what we said. I'll go OpenAI because they had the head start. So, I mean, I think they're still going to be a very good player. And then I'll go with Grok. I think they've got solid momentum. And let's also not forget that XAI is going to be training their next model. They'll be the first on the new Blackwell cluster. So arguably they'll come out guns blazing at some point early next year. And that'll be exciting too. So I'll go with them. But it really is difficult to predict market shares between these over the next year.
And recently we've seen, some of these tech leaders like Musk, Sundar Pichai from Google, who are now touting big data centers in space, gigawatts of solar, zero cooling bills, 5 to 10x cheaper compute. If orbital data centers actually happen by 2028 to 2030, does that really nuke the entire AI cost structure? Does compute really become cheap or free? Who wins? Damia, I'll come to you first.
I think if they can make it happen, it'll be very profitable for the companies. It will require high capex in the beginning, but the operational cost will drop dramatically over time. In terms of who wins, definitely the businesses involved in the operations, making it happen.
I think, if this happens, then I know there's one clear winner, and it's going to be SpaceX. Because Starlink is the only thing which can actually take all this stuff into space and build these data centers. So it's another win for Elon Musk. Anirban, your thoughts?
Yeah, I mean, no power bills sound great, but I'm just not sure whether we have the technology pieces. And I don't want to be like second guessing Pichai and Musk. That'll be above my pay grade. But I just don't know whether we have the ability to actually, SpaceX likely is a winner, exactly as you said, but do we have the ability to actually put these things to orbit? How does it work? How do we repair stuff when it stops working in space? Maybe we need to send a robot, I don't know, along with it up there. Then there's latency to contend with. And the other thing that I really don't know, and I think this is a big deal, is I just don't understand yet. It's not yet clear to me how the distribution is going to look in terms of the compute between being at some sort of cloud provider or like an edge cloud provider or on device. And I think, if the small models work, I would think a lot of the compute actually would also shift to the device. And at that point, I don't know whether do you really need to put, another round of high capex, given that we have already done so much capex for the existing build. So I don't know. That's my speculative answer for this question.
I think it'll make a big difference, if you go from edge AI straight from these devices, which Apple is talking about, where you have these bigger phones and you have your, query in your LLM of your choice. You get a Grok or you get a Gemini or you get ChatGPT and you ask the question and it goes straight from your smartphone or your big new device straight to the satellite, and it basically bypasses all the other routers and everything else and the cables and everything else, the towers and so forth. It will be a fantastic experience for consumers, and I think it will be cheaper. So it's a win-win situation for everybody involved. But we'll see how it plays out. Irnest, I'll come to you.
Thanks. Yeah, look, data centers in space do make sense to me. I think Musk is in an excellent position because XAI you can think of as the compute brain. And then you've got SpaceX, which is handling all the space side of things. You couldn't get a better grouping of companies there. The other issue about space that has been spoken about, and I think is worth highlighting, is the very fast laser communication that you can do between satellites because you're in a vacuum. So that actually helps. Anirban touched on latency. I do think it's an issue. So I don't think it's going to work that well for real-time applications. So like when you need to do fast compute on the go while you're driving your car, there you need the computer in the car. You can't be going up to space and back. It's too many milliseconds. And then I think, will it become free? Because, is it going to nuke all the AI costs that we know on Earth? I don't think so. I think it's going to be hugely expensive to get it done. And Anirban also touched on the maintenance. When you need to fix something, you've got to go all the way up there in space and you've got to maintain things. So it's going to be expensive. I mean, it's not just going to be for free. So there's going to be a lot of calculations you're going to have to do, and it'll be very exciting to watch and see how it unfolds.
I agree. I think we've covered a lot of ground today, despite Oivind not being here. I think we've covered most of the topics that we wanted to discuss. So, coming back, just a quick recap. We are now, heading towards the holiday season. This will be the last podcast for this year because some of us are going to be on vacation in a couple of weeks. So we hope you've enjoyed the first few episodes of AlphaTarget PULSE. We will be back with you again early January. We wish you a very happy holiday season and Merry Christmas. And just to quickly mention before we leave, AlphaTarget basically produces and publishes research on disruptive high growth companies in the public markets. We invest our own money in these companies. We publish in-depth research, and also our subscribers receive monthly updates, equity research reports on all the portfolio companies, expert insights, all the coverage of the news items and the business pulse of all the comments from management at all the various technology conferences and so forth. We also publish weekly updates, which go out every Monday, covering the price action over the last week, the news flow, the stock market outlook, and also the trend indicators that we use, the stage analysis. And finally, we also send out real-time alerts to our subscribers. So whenever we make any changes to our own portfolio, whether we are buying a new holding, cutting out a holding, adding, trimming, whatever we do, putting on the hedge, removing the hedge, we send out an alert via SMS and email to all our subscribers so they know what we are doing and then they can make changes accordingly. If you're interested in knowing more about our research, please visit our website, which is alphatarget.com, and you'll get all the information there. Thank you very much. Thank you very much for tuning in, and see you next year.
Thank you for tuning in to AlphaTarget PULSE. We publish deep research on disruptive, rapidly growing companies we invest in. Our subscribers gain exclusive access to our entire portfolio, including exact portfolio allocations, in-depth research, coverage of companies' news flow, and our earnings breakdowns, trading alerts of our portfolio moves, and our proprietary hedging indicators. You can find subscription information at alphatarget.com. We'd love to have you join us there.